All right, thank you, Bryce. Next up is Susan Metcalfe.
Good evening, and thanks for coming in. I'm Susan Metcalfe. My husband and I have had our business for, over 20 years now. And I actually started the timber taxes. I don't know if any of y'all have been to my other timber tax workshops. This one's going to be very different. Previously, I get into a lot of details and a lot of numbers and examples, and this is like the advanced course for just casualty losses here. So it's going to be a bit different tonight. But actually, Bryce and I met over in Michigan Tech. We were in fall camp together, and that's when we started dating, and that was in '98, so a million years ago. Fast forward in 2002, we were done with school. He starts, actually, I went and got his doing business as for Metcalfe Forestry. We started our forestry business, and I was still at the Forest Service. Fast forward a little further, before 2006, I ended up leaving my Forest Service job to work with my husband at home, to be a stay-at-home mom. We had already had our son at that point, and then I will point out these, it didn't work, okay. These pretty pictures that you're going to see. Our daughter, Claire, she's my second. In 2006, I decided to be a stay-at-home mom and then work from home, and I thought it was going to be easy. I worked harder and more than I ever did at the Forest Service, so it's been an interesting time. So I specialize in timber taxes, inside forester, and I don't really go outside other than just driving around in the truck now. So I will go over, hopefully, this stuff with you. And again, it's more of an abbreviated talk on this. So, and really quick, on all these pictures, if you like any of them, my daughter is going to be, she commissions paintings and stuff, so you get to see a little sample of her stuff, a little clause in there. So, disclaimer, this evening's discussion is educational. It is not legal or accounting advice. The facts and circumstances of every taxpayer situation will have to be taken into consideration. Every single time I do timber taxes for folks, it's different. It's never the same way twice. And this is really no exception. So I'm just going over very briefly. I'm omitting a lot of more complicated parts, but there's a lot more to it. So timber is considered a capital asset. It's real property. When you have a regular timber sale, it's, capital gains tax rate, just like your stocks, bonds, and sale of real estate. It's not, it's not a recent change in the law. From the inception of the federal income tax in 1913, timber's been recognized with special rules and rates. So back in 1913 is when we first adopted and started paying tax. It was the first time. And we adopted our tax code from the mother country over in Great Britain. And so over in Great Britain, they had special rates, lower tax rates for their timber as well, because it's a long crop. It's not like your hay, where you could hay twice a year, or corn, that type of thing. So there is that section of the tax code that helps with that. And it extends also to casualty losses, definitely. So accountants are not foresters. Most accountants are not aware of the timber tax savings landowners can utilize. So I guess I'm a rare breed, So my husband's a forester. He wants to go out and hug trees, measure them, and then have them cut down. I enjoy reading tax code and tax law, and ended up, I'm kind of a little in between. So I get forestry and then apply the tax code to it as well. But if you ever had a timber sale before and your accountant never really knew what to do with it, don't be mad at them. It's because they're accountants, they're not foresters. And in order to do all this, you have to have a forestry background. Timber is also not one of the areas targeted by the IRS shelter. The IRS is an abusive tax shelter. It's another form to fill out, the Form T. So these are some photos taken out on some of our clients' property, just to show you the mess. On the one on the right is a sugar maple stand, and it's just all these little pokies sticking out instead of nice big, branches. The right is the red pine that's so under big time constraint. In this ice storm, over 3.1 million acres were affected. More than half of that is on private land. So you, the private landowner, are the most affected. Now, when I say affected, that's not necessarily severely damaged. Certainly that's part of it. And some of it's just, there's some damage. But it's a huge, huge area of forest that was affected. So casualty loss is what you've experienced on your property there. It can result from the damage and destruction or loss of the property from any, and this is important, sudden, unexpected, or unusual event. So anything that just is very quick that happens. Floods, ice storms, that's what we had, hurricane, tornado, fire, earthquake, or even volcanic eruptions. So if you have insects and diseases and droughts, that's not a casualty loss because it's a very slow process and it's happening. They even put billboards, don't move the firewood, etc. Now, you may end up with an involuntary conversion, and that's where your income tax deduction is allowed for the timber that's been destroyed in whole or part, and so you could have that, depending. So casualty losses. There's physical damage and destruction. There's theft or condemnation. And so tonight we're talking about the physical damage and destruction in some cases. Remember that every reasonable effort must be made to salvage affected timber. That does not mean you have to go out there with your chainsaw and start cutting it down. Actually, you heard not to do that because nobody wants to be dead over it. But reasonable effort is calling a logger, several loggers, calling foresters, and just seeing what you can do. So you write down, okay, I talked to X, Y, and Z people at these days, and so you keep records, all of this. You need to try to sell it. So who can benefit from a casualty loss? And this one's kind of a little more stringent. And I'll explain a little bit later on how that works. So the loss of commercially viable timber due to the ice storm is records of a previous harvest. So hopefully, maybe you harvested previously and you know what you had before and what's left over. And again, we're going back to the 20 acres or more of mature timber. The important other part is that taxable income level is for married filing jointly, around $97,000 is the taxable level, and single is right around $49,000. That puts you into that 22nd percentile tax bracket. There's a standard deduction or itemization I'm going to talk about in a little bit, but just in general, that kind of gives you a ceiling for what tax bracket a casualty loss can help. Now, the other part I'm looking at is cost basis. That's what did you pay for the property on the timberland. This can change a little bit, but if you paid over $500 per acre, not including the structure, structure's completely separate from it. Or sometimes there's a step up in basis. So in Michigan, it's not a common law property. It's not a common law property state. So if Mr. and Mrs. Smith have their property and Mr. Smith dies, then you have a 50% increase in basis. Sometimes it's a parent, a sibling, somebody else on that tax on your deed with you. Anytime there's a death, there's a step up in basis. That's one of the very few ways. There's other ways to increase your basis, but that's the big one. Other than that, if the property was gifted to you from back in the 70s, and your dad's still alive and he took himself completely off the deed, then there's very low basis on it. Reason I keep talking about the basis, the money you put into the property, is because you can't claim a loss for more than what you paid for it. And when I talk about the whole loss or the whole property amount that you have in it, there's dirt, that has a value, and then there's all the trees on it, and that has a value. And sometimes you paid for a house, and sometimes you paid for water frontage. So there's different parts of that. So let's talk about timber basis again. Okay, so that's the money paid for your property. Sometimes people will say, oh, well, I went to the bank and they had me get an appraisal and I paid $50,000 for it, but it's worth $200,000 now. Your basis is still $50,000. You could sell it for $200,000, but it's a different number. The basis can help you reduce your timber sale proceeds or the taxes on the sale. The ice storm can allow to help you claim a casualty loss. So there are, like say if you do sell your timber and you make a bit of money from it, you can defer the gains if you have a like-kind exchange of the timber, or if you have reforestation or that type of thing. There's the replacement period that's generally 2 years after the close of the first tax year in which you realize the gain. So you have 2 years that you could do this. So you made a big gain, and instead of just paying tax on the whole thing, you could do what is called a 1031 exchange. Takes some very specific things. Talk to your accountant about that. I do not do those, but I could help you with figuring your gain, etc. on that. So tax is a major cost of owning and managing private forests. Tax is consistently listed as one of the top concerns for private landowners. This is whether it's the tax that you pay on a timber sale, if it's a tax that you pay your property taxes twice a year. That's it can be a lot, and it adds up. So I'm going to go back to what did you make this year? It's my favorite question. I get to ask people stuff like that unabashedly. So the 22nd percentile tax bracket for the taxable income, that's not the AGI, that's not your net, it's, there's a bunch of other ones. That's the number that we're looking at to see kind of if it will help you. For single, 48,000, for married filing jointly, 97,000. And then we also have the standard deduction, which is over here. If you itemize your taxes, then great, you're not as worried about the standard deduction, but it's really hard to itemize now. I'd say 90+% of my clients don't itemize anymore, and they did, a number of years back. So typically people take that standard deduction. So single, you get to take the standard deduction for $15,000. Married filing jointly is $30,000. And that's important. I'll show you a little later. But the taxable income, yep, okay. So you see right there, that green bar, if you want to look, what did you make last year? Is it kind of comparable, in 24? Is it going to be comparable to 25? That's where you find that number. That's a good one there. So the information that I need from the landowners, and you'll see this on our website, it'll go through there, is the landowner data, where do you live, phone number, email address, all that good stuff. The legal description of your property, so we could look at that up on the line. And then how did you acquire the property? Was it a purchase, inheritance, trade, or gift? The date of whether it was a purchase or inheritance, and how much you paid for that property, and what's on the property. Because sometimes if you're on Lake Michigan, that Lake Michigan frontage just, takes up a huge amount of that basis because it's really, really significant. And the trees, even though they're excellent, have a smaller amount. Then there's sometimes people are enrolled in qualified forest property or commercial forest. That's wonderful. That's an excellent, perfect thing for this type of thing, because that kind of, I'll get into this in a little bit, but you have a map, you have management plans, but that expresses that you're not just a passive owner. There's a big difference on that. Then over the years, capital expenses. You had a survey, you did permanent road improvements, you did reforestation that you never wrote off in a previous tax return. Moving forward, if you elect to capitalize your property taxes, then you get to carry those forward. If you never elected to capitalize them and you were always taking that standard deduction, then you can't really carry those forward until you've actually documented that on your tax return. So there's information that I need from your forester that you have to go out, and so it's good for me to talk with them. The slide helps, absolutely, but there's a little more to it. But the information I need from the forester is approximate number of acres in each timber type. So you have a northern hardwood stand that's 30 acres, a red pine stand that was 20 acres, that type of thing. Then I need the type size density, how many cords, how many MPF per acre. And then I have charts that break down what might be found as your species out there as well. Then additionally, the difference in the fair market value immediately before and after a casualty. And that's the IRS lets you take the lesser of those two amounts when you're looking at what you're going to take for the casualty loss. There's an estimate of the volume and change in value of that timber. So there's the change in products that Bryce was talking about as well. So that tree splits, that veneer is no longer veneer because it's going to have stain really immediately. There's also the consideration from what he was talking about with the crowns, because there's a reduction in rate of growth from that loth in the photosynthesis area. So, tax classifications. We have 3 of them, and this is a real important distinction on how you do this, but I will have slides on each of these. There's a trade or business. This is the best possible case scenario. This is where it's a profit motive. Forestry activities are conducted in a business-like manner. There's an investor. Profit motive again, earning timber income and land appreciation. Then there's personal use or hobby, primarily for personal enjoyment and not for profit. So we're going to go over these one by one. The tax classification, that's trade or business. It's a profit motive. There's material participation. The landowner is out there and does work and is involved in that, even if it's like involved in discussing it with their forester or their logger and having them come out and do these things. There's record keeping. There's prior timber harvests. They could be enrolled in tree farm or qualified forest property or commercial forest act. Typically larger acreage, especially at least 20 acres or more. And they demonstrate active forest management activities. The bottom of each of these 3 slides, it talks about the forms that you use to show this casualty loss. But the important part about this one is it's a reduction of regular income. That's not just a long-term capital loss or gain. It's a reduction of your income level. And this is why it's really important that you're in that 22nd, solidly into that 22nd percentile bracket, because who doesn't want to reduce their income if you're in a higher bracket? So then you have investment, also profit motive. There's activities and involvement, and it doesn't necessarily rise to the level of trade or business. This one requires itemization to replace the standard deduction. So this wouldn't, if you itemize anyways, and you're already into that 22nd percentile bracket, then this can help too. But you have to, if you're single, you have to get past that 15,000 or 30,000. Maybe that's already a done deal, and that's no issue for you. So this one, though, there is more limited tax deduction. Again, it's against your regular income. Now, the worst case scenario, personal use or hobby, this will probably be more for people who they use it for just going out and playing. They never considered or never wanted to cut timber for income, or never could because it's not commercially viable. There's residential landscape trees. That's something completely different. I do not deal with that, so I'm not going to talk about it. This is very limited tax deductions available for folks. So you deduct your casualty loss only in the year that the loss occurred. So in 2025 is when the ice storm happened. You're going to make sure, if you're wanting to do this, to have your casualty loss in your tax return in 25. If you need to, you can get an extension so that, so it's not just April 15th of 2026. You can go all the way, for several months past. If it's going to be worth it for you, it would be worth extending. The valuation determination must be for the entire property. There's no way to do, like if you paid $100,000 for your whole property, you can't break it down into little stands and only do it on the one stand that's the red pine that got blasted because your sugar maple's fine. You have to look at the entire property. You can't break it up unless you've previously done this in your tax return and you've had different blocks. But typically when I'm talking about properties, a good example for splitting them up is you have 3 or 4 properties down in the northern lower and 2 up in the UP. Those are different market areas. There's different timber values. They're different everything. So that would be a good purpose for not combining them. But again, I have to go back to the individual stands on that. You can't do that for it. Also, it's not by adding up the value of the damaged timber. That's something different. If the forest does not have established records, a forester can reconstruct them retroactively. It's a little harder if they're all every which way, but they can still take a good, reasonable estimate. That's what's required, and your foresters can help you with that. A harvest is not required for casualty loss. Let's say you have red pine and you couldn't get anybody out there because the market's flooded, like really fast it flooded, and then you're on a waiting list and then the bugs move in and you can't do anything for it. So even though you couldn't cut it and you couldn't get anyone to come out there and you've made your records and said, I called these 8 loggers and these 2 foresters and nobody would help me because they're too busy. It's okay. You can still do a casualty loss, but you have to have a forester come out into your property. Actually, could I, again, if foresters are still in here, please stand up because y'all are very important. We need to, folks, landowners, please look around and see these people because these folks can help you with this. This is important if you wanted to do a casualty loss. And I'm assuming if you're still in here, y'all might be in that group where it might be helpful for you to do. Specific data is going to be needed from the registered credential foresters that you have. These foresters need to know the data requirements prior to their site visit. So, have them talk to me or look it up in the tax law because it's very specific. So, okay, I already brought this one up. Casualty losses for residential landscaping are treated differently for federal tax purposes. It's not the same as what I'm talking about here. This is a very odd one, kind of counterintuitive, but the cost of cleaning up, the cost of appraisals, all of that, it's not part of a casualty loss. So if you are classified as an investor, you capitalize them, meaning you have these expenses that you paid out of pocket, and you get to put them into the basis, how much you paid for your property. You put those aside for a later time. You don't get to use them now, like when you sell the property. But if you have a trade or business, they are usable on the Form 1040 on your Schedule C, or if you're a farmer on a Schedule F. So that's important to know. Because a lot of people think, I'll just write that off. And so, but it depends on how you're classified. Those 3 slides of trade or business, investor, or hobby. Again, don't ever admit to hobby. That's no good. So the Form T is the place to put all of this. There is, at the very top left over here, you could see the line 13 and 14, and that's where standing timber is lost by fire or other causes during that tax year. And that's where you would show that, it's whether it's the basis, it's the lesser of the two, of the basis in the trees or the fair market value of the loss of fair market value for those. So always keep supporting records on your file. Take photos, get your forester reports. Download a couple news articles about it. You'll be able to pull these up forever. Proof of your effort to salvage the affected timber, especially if you didn't or weren't able to do that. Your forest management records, your proof of ownership, you keep in your files. And try to do cleanup. We were talking with the forest health specialist. There's the cleanup and the salvage, either or, because the fire hazard, the fuel loading, then the bugs that move in and kill the healthy trees after they're done with the injured trees. The forester visit benefits. First and foremost, you get advice on what to do with your forest, because it's overwhelming. It's hard to know. There's potentially, if you do not already have your property homesteaded, you live on the property full time, then if it's just an extra property and you have your cabin, or maybe it's vacant, you can enroll your property to reduce your property taxes by enrolling it in qualified forest property or commercial forest enrollment. That's a lot of money that you could save in taxes in the future if it's a good fit for you. If you're currently enrolled in qualified forest or commercial forest, remember to amend your plan, and you'll want to talk to your forester who did this in the first place. You want to amend the plan because you want, whether you're harvesting or not, because that's going to change everything. That really changes your plan. Then there's potential tax savings, so casualty loss and other timber taxes. But remember, there's other additional data needed for this. So we have reforestation. You could deduct outright the first $10,000 per year for married filing jointly against your regular income if you want to reforest your property. Then if you went over $10,000 in any year, that would be amortized over the next 8 years. But you could do $10,000 in 1 year and write it off against your regular taxes, $10,000 the next year, $10,000 the next year. And this applies to the cost of establishing practices, like, say, if you had to mulch up the trees and then later you had to put in you have to put in the lines for the trees. I can't remember. Maybe Ivan can help me here. Trenching, thank you. Okay, trenching, and then after that, maybe you have to herbicide because a whole bunch of grass is coming up. And then after that, you can plant the trees. So there's all sorts of steps. And then once the trees are growing, let's say you decide to put in red pine again, you might need to prune some of it. Who knows? There's those expenses can be used against your taxes every year. And actually, this is a really simple one to do. You don't need me to do it. If you call me up, I could explain to you or send you how to do that. But that's a very good one to remember. Then we have grants. The state gives you free money. Okay, but there's different parts of it. So there's disaster relief grants for timber damage, and that's payments from state or local governments to compensate for damage. But remember, those are taxable. Like Cheryl was saying, you're issued a 1099 at the end of the year. But you can defer some of those taxes by purchasing qualifying replacement property. We were talking about the 1031. You need your accountant to do that one. Actually, your accountant may not be able to do. You have to ask your accountant who does 1031s. It's a little more complicated. But Michigan, for the grants that they have, they wait until you pay this up front, and then maybe they reimburse you later. So again, you ask your accountant about that one. Now, one of the things, I called up my guy here, my State Farm agent, Andy Patrick here, for homeowners insurance. How does this affect them? So he told me if the tree is touching any structure, the insurance will almost surely cover, they'll cover the cost to remove it and a nominal amount to get rid of it. If the tree is not touching, then they don't. Let me give you an example too. We found out one of our clients had a tree, and it was a widowmaker, and it was hanging over the structure, but it didn't touch it. And then a branch fell off and made a hole in the roof. They did not cover it because it wasn't touching the structure. They didn't need to. So they paid out of pocket for that damage. So just kind of remember. If the other way that the insurance would cover a tree that's not touching is if there's fire or a lightning strike to the tree. Then there's more of a danger, and then they pay to remember it. Now, State Farm, he doesn't know about the rest of the places, but State Farm will remove a tree blocking the driveway for access. But other agencies, you'll have to talk to them. A lot of people say, oh, well, my insurance probably covers my forest. Maybe I'll get reimbursed for that. That is extremely rare. And you would know for certain if you were paying insurance on it, because it's really expensive. It's not your regular homeowner insurance. You would have to be paying bukus extra for it. So you would know it if you had it. So otherwise, talk to your insurance company. Everything's different. So there are, moving on here, there's Qualified Forest and Commercial Forest Act. These are two programs to reduce your property taxes. And you could go to these websites down below, the Michigan.gov, QFP, and then there's DNR. And then also our website does talk about that as well. Now, it will reduce property taxes. It must have a management plan by a qualified forester, and there is minimum forested acreage requirements for it. I'm not going to get into super detail on that, but there are things you could do to reduce your property taxes if you are not homesteaded. If you're homesteaded, you're already getting the discount. So when do you file your taxes? Landowners, the casualty loss must be filed for that same tax year. So in 2025, you have until April 15th of 26, or you can have an extension, that's fine. So in summary, whether you are a timber owner or purchaser, there's all sorts of advantages that you could take using this. It's not easy or simple, but there can be some big value to it if it applies to you. It's kind of a harder one. So here, there's our website, our phone number. I want to point out, not that you could read it very well, but if you wanted to read more about tax law on timber, there is a website. It's called timbertax.org. Excellent. They have everything you might be interested or not be interested in reading about. Also, if you liked any of the artwork of my daughter right here, she's home from college for the summer. We called her in. We said, no, you can't work at PetSmart over the summer. You're going to come work for us. So she's going to be here. So if you like any of her artwork, feel free to take a picture of this up here, and that'd be great. But I appreciate y'all's attention. I know taxes is not terribly interesting, but it's one of those necessary evils, I guess. Maybe not so, but thank you very much.
All right, thank you very much. I just want to extend a really big thank you to all of our speakers today, and an especially big thank you to E-Free Church for letting us host this here this evening. It is after 8, so instead of having any sort of question period, if you have a specific question, feel free to email any of the speakers. Their information is out in the lobby, as well as the Otsego Conservation District. We'd be happy to point you in the right direction, answer a question if we can. But thank you all very, very much for coming out, and hopefully this was beneficial and educational for you. Thank you.